You're never going to be rich being a chef. I thought I was empathetic. I think screw the unicorns. Can we have a beer with them? 800 deals a year. I love the grit. Our core thesis is we invest in legacy industries.
Craig, it's a real pleasure to have you on Between Meetings. Thank you for making the time.
Thank you so much, Marian. It's great to do this. I really appreciate you inviting me to speak with you.
When I was preparing for this interview, I checked your LinkedIn profile. That's what I usually do. And then I found out that you used to be a professional chef.
Yes.
And I think you still have the business in hospitality.
I do, yeah.
That's quite interesting. So can you take us back to your early days as a chef? How did that career begin? And what led you to transition to not very obvious choice, the investment world?
So when I was little, I always wanted to be a chef. Since the time I was probably about 6 years old. Food's a big thing in our family. So it was always, cooking with my mom, with my uncles, my aunts, my grandparents. And I just loved food. I loved the way that it brought people together, made people feel. So it was one of those things where I just got into, and around 8 years old, I said, I'm going to be a chef. And, I started molding my life towards that junior high school. Then I kind of knew, okay, I'm going to go to SAIT, which is here in Calgary, the Southern Alberta Institute of Technology. I'm going to take the culinary arts program. And then I did that course for 2 years and started working around the city, learning the craft, right, and honing my skills. In terms of how I got into this world, it's a very obtuse path, I guess you can say, where when I was 14, my uncles and my aunts and everyone at the time were saying, what do you want to be a chef for? They don't make money. Get into tech. Get into IT, right? Computers was the big thing at that time. And I always said, I'm not a tech person. I'm just not, I know how to use a computer or whatever, but I don't know how to code or to build or whatever it might be, but I'm great with cooking. So they would always say, well, you're never going to be rich being a chef. And I said, okay, it doesn't matter about being rich. It's more about what's going to make me happy.
Mm-hmm.
So I said, okay, I'm good with numbers. I've always been good at math, things like that. I'm going to teach myself how to trade. I was always fascinated with how do you turn $20 to $200. So I got my mom to co-sign a TD Waterhouse account for me. I put $50 in that account that I had saved up for God knows how long, delivering newspapers. And I started trading, and I started watching YouTube and reading books, and just what makes a company good? What makes it investable? What are you looking for? And then it was, how do you read these quarterly statements? And then how do you read the monthly P&L statements? And I really got focused on doing that. And I said, okay, I'll subsidize my poor income as a chef with this. But then it was, let's build this into a big enough portfolio that I can maybe pay for culinary school. So I took that $50 and ended up turning it into about $4,000. And I paid for half of my culinary school with that capital that I was able to grow. I still have that account to this day, and I still trade from it. And then what happened was a chef for 24 years. I ran hotels for Marriott, for Delta Hotels. I was the chef at the University of Calgary before joining our family office in 2020, and then building out the venture capital portfolio for us. And that was kind of the crux of everything. I was always great with numbers. My cousin and I traded together many years ago and realized we could work together and do things together in a really positive way. And that's kind of how I joined the family office. It was one of those things during COVID. I was the chef at the University of Calgary. They sent us home. They were paying me my full salary to wait for the curve to flatten. And, a year later, I was still doing it. At one point, Nick calls me and just says, "Hey, can you help me with some of this crypto stuff that I'm working on?" And I said, "For sure." And I did the research that I've always done for our family portfolio. And it was something my uncle really liked and said, "Hey, we need this due diligence on the trading side and on the venture side." And the venture side really intrigued me. And the rest is history. We now have 14 investments in our portfolio. We're LPs in 3 different funds. We launched our own venture fund, Inverted Ventures Fund 1 last year. So there's just a lot going on in our world, but it's a complete 180 from what I was doing in a kitchen before.
Who cooks in your family now?
Still me.
You
My
still
wife
have time
tries.
for that?
I still have time. Yeah, when I'm home, I do a bit. But my daughter actually is a fantastic cook now. She's really taken on that thing where she's trying out different things like Korean and Mexican food and whatever. So she's always dabbling in the kitchen and experimenting, which is nice.
That's pretty cool. So you already mentioned that you have over 14 investments, right, that you made so far
Yes.
as an angel investor. You're also a limited partner of at Tallgrass Ventures and Viv VCs.
Yes.
And you take on a full-time as CEO at Inverted Ventures.
Yes.
And it's been since 2021.
Yeah.
It's a lot in a really short time. So where did you spot the opportunity and what actually made you to decide to go all in?
I guess the big opportunity for us was looking at, what can we do? We always say we want to finance paradigm shifts. We want to finance companies that are looking to change things for the better in their industry, but to make like a difference to the human experience, right? What are some companies that are looking to change how you can see your kids play sports, to how do you get your pharmaceuticals delivered to you, how you get your food to the homeless, how do we find clean water sources, things like that. So we've always looked at it that way, and that's what we try to invest in. If it's going to help change the human experience, we want to fund it. We want to help people be better. The way we went all in was, we ended up investing in a lot of cryptocurrency in 2020, and we were able to do really well in that space. And it gave us a lot of dry powder. So then we could say, okay, now we can really hone in on what our thesis is going to be as a family. This was before the fund and all that was, why join funds? Why become an LP in Weave and Tallgrass? Was because we aren't experienced in certain avenues, right? Weave is investing in space tech and different things like, in those areas. And then Tallgrass is doing, like not even seed to fork. They're doing like pre-seed to fork. And we understand egg, especially with my background as a chef. I understand egg, but not to the level that Wilson and Chris and those guys do. So we wanted to fund them to get a little bit more opportunity into those avenues. So
as the summer, what's your core thesis now? How do you source deals, and what's your regular or average check size?
Our core thesis is we invest in legacy industries. So we're looking at the slow-moving, large industries that aren't the first to really adopt technology. They use technology every day in everything that they do, but they don't necessarily move first because they're so slow, right, and large. And so what we do is we want to fund those technologies or those founders that are utilizing these frontier technologies and be the first movers. If we can fund them, when the industry as a whole starts to adopt and adapt to these new forms of technologies, our companies are the first for partnerships, M&A opportunities, great co-ops. That's what we're really hoping to fund right now. Our check size is anywhere between 150 to 350K on a first check basis, and then we do save money for follow-on, and we'll go up to 7 figures on that.
And the next question, I'm pretty sure that I will be asking every single investor on this show.
Yeah.
How do you spot the best founder?
That's a great question. The way we like to spot the best founder, it's kind of threefold. The first thing is, can we have a beer with them? right? Can we sit down and chat and have not even about the business? It's, can you just have a great conversation with them? Are you able to, um, have conversation, collaborate with them? Because I think one of the big things that a lot of investors and founders might also forget is that, this is a 10-year relationship, right? You're married to each other at that point. And, we always strive to be active investors. We want to be with our founders and their teams, you know, talking to them constantly. Every week I'm messaging our founders, just, hey, how's it going? It's not a how's the business going, are things good or bad? It's just, how are you? Is your mental health good? How's your family? Going on vacation? Are you doing, like, what's going on in your life? And then inherently you get information, right? As you go on in the conversation. I would say the second thing we look for is honesty. Are they being honest with us? When we ask for certain things in the data room, or we ask for certain answers to the questions that we have, we just want honesty. If they don't know, they don't know. They don't have to be perfect, right? Don't have to be a jack of all trades. We're not investing in that. The third thing, I think, is to have a level of humility, of knowing that you're not the best at everything. You don't know everything. Are you going to be in your field, or the sector that you're operating in? Are you at the highest echelon? Hopefully, you don't have to be, but know exactly what's going on. But you don't have to be a jack of all trades. Also, to understand and know when they might not be the best fit to be the CEO anymore, right? And I think that's one of the things some of our best founders that we have had those conversations with us, where it's like, you know what, I can get this company from 0 to 4, but from 4 to 10, I might not be the right person. But I want to build, coach, try and find that person. I think that takes a lot of humility, and those are the people that we want to invest in.
You work with capital firms as an angel investor, and now for the family office. Which structure or approach you feel the most, comfortable for you? What is the most challenging part of it?
Ooh, that's a really good question. I would say that I really like working with the family offices, because they have a little bit more room to move. You can be quick, or you can be as slow as you want. We work with a ton of venture capital firms, and there's a lot of, with families, there's a lot of answering to the family. So we're kind of lucky that we're the family and the owner operators of the family office, whereas some family offices have a third party coming in and working with them, and they have to get everything past the family, which takes time. That's kind of like on the venture side. You have to get things through LPs. You have to get things through your LPAC, things like that. So I find that working with families that are family operated just work fast. Those co-investment opportunities happen very fast. But we love working with everybody. It's one of those things where there's so many avenues, whether it be the, like the institutionals that you can work with. You get so much insight, help in that sense. And then with families, it's quick, and they have the same mindset as us in a way. And I think that really helps with us on the family side.
One question that kind of I'm curious personally in, because you're the investor, you have definitely all these titles on your LinkedIn profile.
Yeah.
So I assume that you receive hundreds and thousands of messages, right?
Yes.
Whenever you go to the event, I know sometimes investors, they just don't even want to show the badge, right? Because you will be reached out by so many people who is looking for fundraising. So how do you deal with those situations? How do you actually filter out? Do you feel like if you don't reply to them, you might miss some of the great deals? So you have, I guess, some structure around it.
Yeah, I think that, one of the big things that raising capital, now that we're raising this fund, and, constantly raising capital for and having, it's given me I thought I was empathetic before and would answer emails relatively quickly. I'm like, if I get to them in 24 hours, it's okay. I have so much more empathy for founders now, where I answer back emails as quick as possible. Try and get to them, and to give them the time of day that I feel that they deserve. The one thing, when we go to the conferences and a founder comes up, I know some people get annoyed at that. I love the grind. I love the grit, be respectful. If people are having conversations, don't just come in and butt in. That probably loses you some points. But when people come in and go, hey, can I just tell you about my business? Yes, please do. Right? I love that. You know, we see about 800 deals a year, I want to say. So we see a lot. There's a lot of deal flow. Getting back to everybody is very tough. But if I get an outreach email over LinkedIn or on email and it doesn't fit, I give them a no right away. I just don't sugarcoat it. It's just, hey, this isn't for us. It's not part of our thesis, or we're not looking at this right now. I try and give them as much guidance rather than stringing them along. I think giving the quick no, the amount of times I've been told now, like, hey, thank you for not wasting my time, right? And it's like, I know you're busy, we're busy. And I'm like, yep, if I string you along, that doesn't help you. And that doesn't help us. So I think that's the way I look at things a lot now. And that comes a lot from the fundraising aspect of things.
How much time on average do you spend per review in one deck?
4 to 5 minutes, right? Not a long time. I'll look through it and just kind of, I look at the main pieces, right? What are they doing? The problem they're solving. Is this a problem that people are willing to pay for to be solved? What does the team look like? And what are the terms? What are they raising and at what valuation?
And in terms of geography, are you focusing on Canada or it's global?
So we're registered in Canada. So Inverted Ventures Inc., which is our VC arm, is based here in Calgary. And we have Inverted Ventures Global, which is our trading where we do our cryptocurrency and commodities, equities, things like that. That's incorporated in the Cayman Islands. So we broke off our family office just a bit to have two jurisdictions. We do invest primarily in Canada. We really feel that Canada is just this market that has such great founders, such great grit. So we're looking at Canada, and about 70% of our deal flow comes through the Western Canadian landscape.
Interesting. Let's talk a little bit about the ecosystem. Here in Calgary, definitely we see the spike, so there's the momentum, we have the investment, we have the founders, there's a lot of excitement, lots of support from the government and from the private companies as well.
Yeah.
So how would you honestly describe the ecosystem right now here in Calgary? What excites you right now, and where do you see the biggest concerns? And what we can do better as an ecosystem?
All right. The ecosystem in Calgary, Alberta, even Western Canada, I love it. People are collaborative. I always use that word, collaboration. People work together. They're always sharing deals. They're always talking about amazing things, making room for each other in deals. You know, I think that's something that you don't see in many other markets. I really like the way that everyone talks to each other when you get together. So one of the best things, at the Inventures Conference this year, I had a VC friend from Ontario that we know really well come out, and he just looks at me and he goes, Craig, what is going on here? And I'm like, what do you mean, what's going on here? And he's like, this isn't a traditional VC conference. This is a high school reunion. Everyone's hugging, they're talking, they're having a great time. They're openly talking about deals. He's like, what is going on in Calgary? And I'm like, this is the ecosystem. This is the collaboration. Everyone's working together. So I love that we have that, and I hope that we never lose that as we grow, and as we're growing pretty exponentially as an ecosystem. I really hope we don't lose that. What I think we should do better is something that I might be a little bit loud on in the ecosystem, is I feel we don't talk about our wins at all. We talk about, you know, everyone's hoping for the unicorns and, you know, these things. I think screw the unicorns. That's going to be my thing, is that how many unicorns happen in Alberta? How many unicorns happen in Calgary? One every 7 years? One every 6 years? So we're scaring off family offices, high net worth individuals, investors that would come in and put a little bit of money into this ecosystem and into this asset class, because we talk about something that's so far away and far-fetched. But there are exits that happen, company exits at 20 million, company exits at 30 million, 50 million, you know, and you might hear a dabble of it because we're in the industry, but the outside world isn't hearing about it. The people that are going to be new money coming in, deploying, we need to talk loud and proud about that. Now, I think with the influx of a lot of the larger funds out there, a micro fund like us, which is $5 to $10 million, a micro fund like Weave, which is $5 to $10 million, even the Tallgrass, which is 27 million. Those are, the math kind of works for some of the smaller exits, but some of the bigger funds that are 20 million plus, it's hard to talk about those wins because the math doesn't work on the VC math, right, for the exits. So I think that we need to talk about, hey, if you invest in a company at a 5 million pre-money valuation and they exit at a 25, that's a 5x. Might not be good for the bigger funds as a percentage, but to the farmers, to the oil and gas executives that have a little bit of money to throw into it, a 5x is monster, right? So we need to talk about that and tout it and showcase it, because that money is going to come in and invest into the ecosystem because they see liquidity. The number one thing you hear about venture, which they're not wrong, where's my liquidity? I can invest in an oil patch thing right now and get liquidity within a few months and start getting dividends. You can't do that in venture, but you're not going to get a 5x doing that on the oil patch. You can get that relatively handily, I guess you can say, over 6-7 years on the VC side of things. So to talk about it in that way and have more of these exits talked about and touted on regular news and the ecosystem, just go deep into that, I believe that's what we need to do better 100%.
I love it. Craig, thank you so much for your insights, for the great conversation. I'm wishing you continued success in all your ventures and the ventures you support.
Thank you so much, Marion. I really appreciate doing this.